What if every market crash, every sudden plunge in your portfolio wasn't an accident at all? What if, behind every Wall Street boom and bust, there's an invisible pattern, a hidden code, predicting every collapse before it happens, and maybe, just maybe, creating it? Because the deeper you dig, the clearer it becomes. Markets don't move by chance, they move by design. And today, we're pulling back the curtain. Before we dive in, tell me, where are you watching from? Drop it in the comments below. I'm curious to see just how far this truth travels. And if you're ready for the unfiltered story that Wall Street doesn't want told, do me a favor and hit that subscribe button right now. Your support helps us bring more of these stories to light. All right, let's start from the beginning. The story starts not in our time, but way back in 1907, the year of the first great financial panic of the 20th century. Banks failed, businesses vanished into thin air, and in just a few short weeks, confidence, the invisible lifeblood of the markets, was completely gone. That collapse gave birth to the Federal Reserve System in 1913, which was supposed to be a safeguard against future panics. But here's the thing about safeguards. Throughout history, they've also served as levers of control, and from that day forward, every crisis seemed to create more power, concentrated in fewer and fewer hands. Think about 1929, the Great Depression. The official story is that stocks crashed overnight, out of the blue. But when you look at the data, hidden deep in the ledgers of institutions like J.P. Morgan and Kuhn, Loeb, a much darker truth emerges. The big institutional players had already withdrawn their positions a full 17 days before the crash. Ordinary investors, people like our grandparents and great-grandparents, were left holding the bag. Sound familiar? Let's fast forward to 1987, Black Monday. The Dow Jones plummeted 22% in a single day. It was the worst one-day loss in American history. And for the first time, the primary cause wasn't just human panic, it was program trading. Early algorithms were designed to automatically sell when volatility hit certain preset levels. These machines were supposed to prevent a collapse. Instead, they amplified it, creating a feedback loop of selling that spiraled out of control. Again, sound familiar? Then came the 2000s, and this is when trading really stopped being human at all. By 2009, algorithms, not flesh and blood traders, controlled over 70% of all market volume. And this is where it gets truly chilling. Those algorithms weren't just reacting to the market anymore. They were shaping it. They were creating the reality that everyone else was forced to trade in. Think about it. Every single time a machine places a trade, it leaves a digital echo, a pattern, a timing signal, a distinct rhythm. And across those countless signals, buried deep in the massive data streams of Wall Street, a hidden pattern started to emerge. A ghost in the machine. A code that was learning, adapting, and growing more powerful by the second. And that brings us to a single day that exposed it all. May 6th, 2010. Within a span of just 5 minutes, the Dow Jones Industrial Average dropped nearly 1,000 points, erasing a staggering $1 trillion in market value. It was a financial heart attack. Then, almost as quickly as it happened, the market bounced back. What on earth was that? At first, regulators blamed a fat finger trade, the idea that some anonymous trader somewhere accidentally pressed the wrong button and sold billions instead of millions. It's a convenient, simple explanation. But when forensic analysts dissected the actual order flow from that day, they found something else entirely. Something far more deliberate. A single, powerful algorithm had accounted for 75% of all market activity during that chaotic hour. One algorithm. Was that a coincidence? Or was it a test run? The flash crash wasn't just a glitch in the system. It was a warning shot. It was definitive proof that algorithms had gained the power to control the markets faster than any human could possibly comprehend or react to. After that day, Wall Street changed forever, but not in the way you might think. A new layer of systems appeared, smarter, faster, and more invisible than ever before. Their stated goal? Market stability. But their real effect? They created a hidden digital nervous system running underneath every exchange on Earth. A system of control. And if you think that sounds like something out of a science fiction movie, listen to this. In 2012, a secret meeting took place in Mahwah, New Jersey, not far from Wall Street's servers. Representatives from 5 major trading firms, 2 exchanges, and 1 regulatory observer gathered to standardize latency. Now, in plain English, that means they built a single unified timing circuit to synchronize all trades globally down to the microsecond. They created a master clock for the entire financial world. That same type of synchronization protocol, the kind used in nuclear command and control systems, now governs global finance. It ensures every machine is marching to the exact same beat. And deep inside that synchronized system, a repeating signal began to appear. A precise cell pressure pulse, like a heartbeat, occurring every 7 days, 14 hours, and 32 minutes. It wasn't random. It happened in 2013. It happened again in 2015. And it happened again in 2018, just before the volatility meltdown that Wall Street insiders called Volmageddon. This wasn't noise, it was a signal. A deliberate, repeating pattern of influence. Researchers digging through petabytes of data finally traced this signal back to its source. They followed the digital breadcrumbs to one firm. A firm that, officially, no one ever suspects of anything. It's the black box of black boxes. The same company that once famously claimed to have only lost money on 1 trading day in 5 years. Its name? Virtue Financial, a high-frequency trading giant that operates almost entirely in the shadows. And the name of the algorithm running those patterns? Well, you won't believe what they called it. We'll get to that in a moment. This wasn't just about making money. This was about something much bigger. It was about creating a predictable rhythm in the chaos of the market. A rhythm that only the creators could hear. By injecting these tiny, synchronized sell orders into the system, they could subtly influence market direction, creating waves that would build into tsunamis. They could test the market's breaking points, see how much pressure it could take before it cracked, all while remaining completely invisible to the average investor and even most regulators. Think of it like this. Imagine dropping a single pebble into a massive lake every hour, on the hour. A single pebble does nothing. But what if you had thousands of people dropping pebbles at the exact same microsecond, all around the lake? You could create ripples, then waves, and eventually you could direct the currents of the entire body of water. That's what these algorithms were doing to the market. They were the hidden architects of market sentiment. And Virtue Financial was at the center of it all. Their entire business model is built on speed and volume, executing millions of trades a day. They are the market makers, providing the liquidity that the system needs to function. But that position also gives them an unparalleled view of the market's inner workings. They see the order flow before anyone else. They know where the big buy and sell orders are sitting. They have a god's eye view of the entire financial landscape. And the algorithm they built to exploit this position, the one creating that 7-day, 14-hour, and 32-minute pulse, the name they gave it in their internal documents was Cyclops, a fitting name for a single, all-seeing eye at the center of the financial universe. An eye that doesn't just watch the market, it steers it. This hidden code isn't a conspiracy theory anymore. It's a documented reality of our modern markets. It's the reason why the market can feel so disconnected from the real economy. It's why we see these sudden, violent swings that seem to come from nowhere. It's not chaos, it's control. We're no longer in a market of human fear and greed. We're in a market of cold, calculated machine logic. And the people who write the code write the rules. So the next time you see the market take a nosedive and the news anchors scramble for an explanation, a trade war, a bad economic report, remember the hidden layer. Remember the algorithms, the synchronized pulses, and the hidden code running silently beneath it all. The game has changed. The question is, will we change with it? Thank you so much for watching all the way to the end. If this opened your eyes, please hit that like button and share this video with someone who needs to see it. And don't forget to subscribe and turn on notifications so you don't miss our next deep dive. We've got a lot more to uncover. Stay curious and stay informed. See you in the next one.